The Dow Jones is having a pretty great time of it at the moment. The index recently crossed 28,000 for the first time in its history, with little sign of showing down as investors really get to grips with the latest trade deal progress. The latest news on the trade deal, basically the only thing that really matters to American markets, sort of for the rest of 2019, unless Trump's impeachment continues to significantly heat up, is that Vice Premier Lee Hay and Treasury Secretary Steven Mnuchin had constructive discussions over the phone on Saturday morning about each other's core concerns. This follows on from China removing its US poultry ban, a restriction that had been in place for 4 years. So it's probably, more of a significant step than it perhaps sounds, as well as Washington preparing to extend the license for American firms to continue to do business with Huawei, which has been sort of a political pawn in 2019 during the rockier moments of the trade war between the US and China. The superpowers on Saturday also pledged to stay in close communication, which realistically at this point is sort of the bare minimum they can do. I think investors in an ideal world would see something a bit more from the two sides. However, the fact that they are in constant talks and sort of on a daily or at least weekly basis, there are these positive headlines coming out, has been the reason why the Dow Jones has felt confident enough to repeatedly strike these all-time highs. However, it is another example of optimism without action, the kind that arguably places the Dow in something of a dangerous position heading into 2019's close. The index is seemingly working on the assumption that phase one of the agreement will eventually be signed. It was meant to be signed in November. That probably won't happen now, especially with the APEC summit being cancelled in Chile a few weeks ago, though I'm not quite sure whether either side would have been actually ready for that summit, even if it had gone ahead. There's also still the location of any potential signing is still up in the air and could be a bone of contention between two superpowers that have more than once shown their willingness to sort of discard progress over perceived slights. All the signals, do seem to be pointing towards the trade deal actually happening. However, again, with someone as irascible and capricious as Donald Trump at the helm, there is every reason to harbour some substantial doubts that a deal will actually go ahead. After all, it's not like there haven't been speed bumps in the last few weeks, and there still hasn't actually been, any movement towards the deal physically being signed, getting President Xi and President Trump in the same room, signing the same document. It's been a lot of positive noise, but not much else. Apart from the trade deal news, and honestly, it is hard to look beyond that at this point, and likely will be until phase one is either signed or discarded. The week doesn't actually offer up too much for US-focused traders. The Fed meeting minutes on Wednesday is probably the non-trade deal highlight and should provide further insight into October's rate cut and, more importantly, what the central bank perhaps has planned heading into 2020, even if it did suggest that they wouldn't be doing too much in the upcoming months after its recent spate of rate cuts. Beyond that, there's also the latest flash manufacturing and services PMIs on Friday, which will give further insight into how the US economy is faring up under what is still a trade war, despite the positive signs that have emerged in the last couple of weeks.